Alrighty, what's going on, everybody? Welcome to our weekly Outlook webinar. Thank you guys for joining me today. I'm really excited to do today's webinar for you guys. I have been absent. I have been away from trading for a couple weeks for my first time in actually a couple years of trading full time. I had to step away for a couple weeks due to some personal reasons with my family. But I am excited to get back into things. I just want to jump right into things, guys. I don't want to waste too much of your guys' time today. It's not going to run too long today. We're just going to look at some news that is coming out this week, and then I'm going to be giving you guys my bias on a couple pairs. As always, feel free to ask any questions in the chat. I will look in there throughout this webinar and get to any questions if you have any. Also, if you need to watch this recording, or if you're watching this recording right now, it's on YouTube for you guys. And last but not least, just a disclaimer is that anything I share today, guys, should just be taken as educational information. Please don't take anything as financial or investment advice. This is just my opinion, my bias on what I think is going to happen. Especially what you guys are about to see today, I think we might see you guys are going to see that I have a pretty, I guess some people could say, a bold outlook on what is coming up in the markets. I'm really excited. Most of you guys watching this are in the premium group and or connected to my trade copier if you're in the premium group. And I'm excited. There's a couple different pairs that we're going to look at that I'm interested in taking some swing trades in. So I'm excited to get into these spring and summer months of trading. But first and foremost, I do just want to look at the economic calendar very quickly, because we do have a couple things. We have a couple interest rate decisions, a couple important speakers this week. So just to start off this week, the next 24 hours or so is pretty light. We have some Australian dollar and some New Zealand dollar news, which I'm not too worried about. But in a little bit over 24 hours from now, we have the head of the Federal Reserve, Mr. Powell, speaking. So those of you guys that are not familiar with Powell, he is the one that preceded Janet Yellen. She was previously the head of the federal chair. Now it is Jerome Powell. I believe he's been, actually says right here, he's been federal chair since February of this year. So he is going to be speaking for the Federal Reserve on the US dollar. So that's something I would definitely make sure, especially if you guys are trading something like Euro USD or pound dollar, or really any US dollar crosses, be aware of that. It's probably going to be pretty volatile. Some more Australian dollar news. And then we have an interest rate decision Wednesday. So Reserve Bank of New Zealand, that is our first interest rate decision this week. And then I believe Thursday, we also have a pound interest rate decision. So 2 interest rate decisions this week. A couple other red folders you can see that I'm not really, focusing on as much, but they are there. And then Friday, to end it off, we have Mario Draghi speaking. So he is the head of the European Central Bank. So he would be what Mario Draghi is the equivalent for the European Central Bank of what Jerome Powell is for the Federal Reserve. They're like the equivalent of the heads of their respective central banks. So that's just the main thing I wanted to look at, guys, is those 2 interest rate decisions and those 2 speakers this week, among the other high impact news to look out for. But without further ado, let's jump into this. My technical outlook. Let's replace this trend line. Okay, so first off, big shout out to Louis, one of the co-founders of Positive Traders. He gave me this idea to do this for you guys. I think this is going to be a lot easier. So this isn't on every single chart. So we're going to be looking at all of these pairs over here to the right. And this isn't going to be on every single chart. On a majority it is, but it's not on all of them. I am going to have like a black line that you guys are going to see from now. I think I'm going to like start trying this and see how you guys react to it. If it works out, we're going to start doing it. And this is going to be kind of like my bias. Now, let me just be clear too with this black line that, and I'm going to say this every week when I'm going over this, the black line, that I don't necessarily know if it's going to happen all in one week, right? We may not see all the way down here reach this week. This is just kind of like my general bias that I think is we're probably going to see happen within the next one. It depends on how volatile the markets are, right? But I think it could happen within like the next 1 to 2 to possibly 3 weeks. I'd say longest is like maybe 3 weeks. Okay. So, and then we'll adjust this as necessary, but some weeks we're going to see it, maybe happen in that entire week. So anyways, just to get into the point of what I want to show you guys with the dollar index, a couple key things. So if you guys have been following along with my webinars, obviously I haven't had one in the past 4 weeks or so, but before that, for the 2 years up to the past 4 weeks, we've been doing one just about every single Sunday for you guys. And if you have been following along, or if you are following along with the daily webinars in the premium group we do every week, every day, we've had the 93.2 level on the dollar index, okay? And just something to note is that we're coming back up to retest this area. And I think we're going to find some resistance in this area. Some of you guys that may have been following my outlook for the dollar this year is for the dollar to, throughout this year and into 2019 weaken. I think we're going to see, just like we did last year, right? I mean, there were times that we saw some mild strengthening of the dollar, right? I'm pointing, and this is last year that I'm pointing out, right? Just a couple times last year that we saw some mild strengthening of the dollar. But ultimately, the overall trend of the dollar was weakening last year. And I think that's what we're going to see happen. I think ultimately we're going to see something like this happen. It's probably not just going to it could just drop very aggressively like it did last year, but we'll see what happens. But anyways, that's for another time. What we're talking about is my outlook for this week, which I think over this week and the coming weeks, we're going to find some sort of resistance around this 93.2 level, and we're going to see some downside. So that's just my bias. So again, dollar index, finding some sort of resistance around the 93.2 level. Also, just to back up to the weekly chart on the dollar index, if we actually fib out, you guys can see I have it fibbed out already, this previous swing to the upside, right? This previous move to the upside. And if we fib out, what percentage amount we've retraced since that move, we have recently found a bounce off of the 61.8% retracement level. So just something to know if some of you guys are wondering about my fib levels. So that is with the dollar index. I see there's a couple of people joining right now. There's some commentary on my absence at the beginning of this, which will be recorded and uploaded to YouTube. So if you guys want to watch that. But anyways, gold, I think we could see some upside on gold too. You can see I kind of have like my little prediction with my little black line right here that I think, like I said, same thing with the dollar index, same thing with all the black lines that, could happen this week. That's a pretty aggressive big move to the upside. But so most likely this is going to happen within like 1, 2, probably up to 3 weeks. But I think we are going to see gold move back up to the 1350 level. Just something to note too, if you guys don't have the 1350 level on your charts with gold, I would highly recommend having that. It's for a couple of reasons, right? Not just a technical level, but it's also if you guys are familiar with the quarters theory, or it's a psychological level of, in this case, resistance since price is below this area. So we have the 1350 area above price and we have the 1300 level. So I personally like to have a support and resistance at the nearest $50 resistance and the nearest $50 support on an ounce of gold. So in this case, we're at 1315. So the nearest $50 resistance is going to be 1350 and the nearest $50 support is going to be 1300. And we've actually seen price stay fairly rangy on gold between the 1300 and 1350 level. And I think it's going to continue to stay rangy. I think we're going to see price move back up to the 1350 level as we see the dollar weaken, as I'm predicting it will. Euro USD, same thing. We have seen a pretty big run to the downside the past couple weeks. But I do think that if things are turning around, well, I mean, not right this second, it's not turning around, but what I mean is I think we're going to start to see some signs of a reversal, and ultimately we're going to see Euro USD start to rise as the dollar continues to long term as it has weaken. And so that's Euro USD, gold, dollar index, USD Swiss franc. So opposite of Euro USD, right? Very simple. If you guys are not familiar with the correlation between Euro USD and USD Swiss franc, I think that that's something, or even Euro USD and the dollar index, DXY up here. Those are two very big correlations that you need to have written down. So I also, by the way, I see a lot of new people on here. Thank you guys for watching this. But anyways, just very quickly to go through those correlations, Euro USD and the dollar index have a extremely strong negative correlation, like a 99% negative correlation. They literally do the exact opposite of each other. And not as strong of a negative correlation, but we do see a very high negative correlation between Euro USD and USD Swiss franc, right? It's not like an exact mirror image like it is on the dollar index and Euro USD, but for the most part, it is the opposite. So if I'm expecting Euro USD to the upside overall, and I'm expecting the dollar index or the US dollar to weaken overall, then I'm expecting this pair to weaken as well. So that's a couple things. You won't see any like predictions on either of these pound pairs. I have just a couple key levels, just some resistance, some support outlined on both of these pairs. But yeah, I'm just going to skip over both the pound pairs right now. We've seen a pretty big sell-off. I mean, across the board, guys, I don't want to sound like a broken record, but all across the board, we've seen some major dollar strength the past 2.5 weeks or so. I mean, you can just see if we just look at the dollar index and we put it on the weekly time frame, right? You look at the weekly candles of the past two, and then we kind of started that 3 weeks ago. We've just seen a major bull run on the dollar. So really in every pair, as you can see, has some sort of relationship to the dollar. So we see it reacting to the dollar strength. So pound yen has also weakened. Neither of these pairs I'm really interested in trading, so I'm just going to skip over both of these. You will see a prediction on dollar yen. So I do think dollar yen is we're going to see some major downside on dollar yen. This is another pair I'm actually very interested in getting into a trade in. I want to point out last week's, let me just very quickly delete or just hide all the drawings. Just look at last week's, or not even just last week's, but last week's and the week before last. Just look at that price action, right? We have an initial bull run, and then last week that bull run kind of started to taper off, lose some steam, found some resistance around the 50 EMA, and we'll see how things go. But if we do see the dollar weakness that I would like to see or begin to see, then there's a very high probability that we're going to see this pair see some downside over the next couple weeks or months as well. And AUD USD, one thing, I'm not sure if I've talked about it as much on the weekly outlooks with you guys. I think I may have briefly talked about it on maybe one or two in the past, but I've definitely talked about the structure of AUD USD, but specific targets, maybe not. But we have seen kind of a completion, or in my opinion, a completion of my trade idea. Many of you guys remember this previous uptrend and then this move to the downside. And weeks and weeks and weeks ago, when price was up here on our weekly webinars and also on our daily webinars inside our group, and then for you guys on this webinar, we talked about expecting some major downside because we had seen a very similar pattern in the past, right? That big move to the upside. So we talked about if and when that big move to the upside was broken to the downside, we were probably going to see a big push to the downside, just like we did in the past. And we did see that. Got a little choppy around a couple weeks ago, just prior to my absence. And then since then, we have seen, looking at it in hindsight, right? We've obviously seen that the past week or two has been very weak for this pair. Obviously, hence the dollar strength, and we are at the 76 area. So essentially, guys, I'll just be straightforward with you guys. Drop some nuggets for people that are in the free group watching this, that I'm looking at taking a swing trade, a swing buy on AUD/USD, somewhere around the area where it's at now. I think we have a very high probability, and there's a good opportunity for a good risk to reward. With this being a long-term swing trade, the stop loss is going to be a little bit higher than, or the stop loss in pips is going to be a little bit more than a regular, intraday trade. So we're going to be looking at about like, anywhere between a 75 to 100 pips stop loss. So stop loss would be somewhere in this region. And then my long-term target on AUD/USD is 0.80. Okay. So let this go on the record right now that you guys are hearing it. That this is just my opinion. Again, guys, remember, this is just my opinion, but I do think that this has a very good probability of doing that. So if we had, let's say, like 100 pips stop loss, and we're around the 75 area going up to the 0.80 long term, that's about a 500 pip gain of a swing, right? So that's a 1 to 5 risk to reward. So if you risk 2% of your account with the 100 pip stop loss to make 500 pips, then you're risking 2% to make 10% because it's 1 to 5 risk to reward. So very high probability trade there. This is something that I'm very interested in trading. It is going to be traded, and I'm very interested in it. So something to look out for on AUD/USD. NZD/USD, same thing, just because we tend to see a very positive correlation between AUD/USD and NZD/USD. So I'm expecting that upside to be coming soon on AUD/USD. So same thing on NZD/USD, just for it to follow in its footsteps. But just to kind of recap price action on NZD/USD, we had seen it ranging for quite a while, and then we obviously see the past week or two a break of the support, and then some pretty significant downside. However, if we look at the range of NZD/USD, it's still in the range that it's been in since 2016. So I think we're going to continue to stay inside this range. But overall, I would be looking at AUD/USD over NZD/USD, but I think NZD/USD will follow AUD/USD. You'll also see a prediction on USD CAD, and this is just about it. So USD CAD, I think we're going to see some downside. A lot of it has to do with oil. Let me just show you the weekly time frame on oil, and just for a technical outlook. So oil, from a technical standpoint, let me get my marker out. We had this previous significant resistance level where we consolidated for quite a while around this area, but what I really want to look at is the past couple 4 weeks, the weekly candle from 4 weeks ago in particular. Right here, what happened with this strong bullish engulfing candle. It kind of rejected once again off of around the 61.8 area, and now we're bouncing off that area. I think there's a lot of momentum for some upside on oil. Not to mention just from a technical standpoint, but there's also a very supporting fundamental argument for oil to increase. And it's actually, it's been, if you guys are familiar or read up or experienced or updated, I guess that's the word I'm trying to say, is updated on the oil news, you'll know that there's a very high demand for oil right now. It's no surprise, or it's expected that the demand for oil is going to go up and the price is going to go up this year. So that should, anyways, so the reason I'm saying that, so some of you guys may not know the correlation between oil and USD CAD. So that's the whole reason I go over oil, or occasionally go over oil, and I just did. So another correlation for some of you guys that may be new to Forex or new to correlations, you can write that down if you have your trading journal next to you right now, is that USD CAD and US oil have a negative correlation to each other. And I'll just keep it at that for now. You can maybe watch one of my older webinars. I've gone into why and stuff, but we'll leave it at that for now. I don't want to take up too much of your guys' time, but you can see my prediction for USD CAD. And because I do think US oil is going to appreciate and it's going to increase in demand and price, I think the Canadian dollar is going to perform well momentarily. At least I think we're going to see the Canadian dollar probably drop a little bit. And so I think we're gonna see some resistance around this area and see some downside. And that's that. One thing I just want to backtrack very quickly, and I want to point out one thing with USD Swiss franc, guys, because this doesn't happen often. I don't know how long it's going to be at this area, but this is just some education. Some of you guys, more experienced people, may know about this, but just something I want to point out. USD Swiss franc. There's a term called parity, which is when it's 1-to-1. So right now, USD Swiss franc is actually at parity. It's literally like within just a couple. It's not even like it's like 3 pips of parity. So it's basically at parity. Like when this webinar started, it was above. It was 1.00. So it's right there. So when you see 1.00, which it could be in a couple seconds on USD Swiss franc, and it's been around this area, that means that $1 US equals 1 Swiss franc. So not one currency is stronger. They're valued the exact same. So just one thing to look at the timeline on USD Swiss franc, and I meant to go over this when we were going over this pair originally, so I apologize for going back. But this has been a very significant level, right? Parity on USD Swiss franc, and you don't see really any other pairs very close to parity, right? I mean, Euro USD at one point was very, very close to parity, but nothing else really gets close to parity. So this is why I just want to go over this. But you can see parity has been, and then parity is basically around this green zone, right? Give or take a couple pips. And we've seen a bounce in the past, right? In the late or early 2000s, we saw price drop and then bounce again. So just something to show you guys, right? And then we broke through, bounced off again, found some more resistance off of, and then just more recently, the past couple of years, right? The past about 4 or 5 years, anytime we've seen price come around this area, we've seen a pretty major bounce. A couple times we've gotten, for a couple weeks here and there, we've sat above parity, but overall we've seen price for the most part range a little bit below parity. So that's just something I just want to point out, where if you guys have been paying attention and following along with all the correlations and that I went over earlier, that you guys know that my overall opinion for everything right now, or the markets as a whole, is overall long-term dollar weakness, right? And if we see that long-term weakness on the dollar, that we will see USD Swiss franc go down, right? Because we're going to see the US dollar depreciate, and that will in turn create the appreciation for the Swiss franc. But right now, I just want to show you specifically on this pair how this is just another piece of, I guess, quote unquote evidence supporting evidence for a bounce off of this area, but also dollar weakness, right? Because if we see that dollar weakness, then we're going to see a bounce off of this area. So just as we've seen a bounce off of this area multiple times over the past decade, where it's very probable, and this is when people talk about high probability trades, or HPT, high probability trading, it's you don't know the outcome for sure, right? But it's a high probability. That's the whole idea behind trading, right? Is getting an edge on things. So that's that, guys. Very quickly, I'll take 30 seconds and just quickly speak on crypto. We're seeing a very nice recovery. And just as I have given commentary on crypto in the past here and there, and maybe more on depth on my daily webinars for you premium members, but I am still obviously holding everything, right? Still long-term bullish, just as I have talked about on every single webinar. I've always talked about being long-term bullish and long-term upside on, especially on things like Ethereum, Bitcoin, and some of the more other ones that we've talked about. But the markets as a whole is recovering right now. I'm very happy to see where things are, especially Ethereum, which I personally hold most of my portfolio in Ethereum right now. We've seen, since the recent lows, we've seen over 200%. It's more than doubled since the recent lows. So I'm very happy. It seems to be in a bull market, and I'm, obviously I don't check my wallet every single day. I don't check coin market cap every single day. You know, maybe once every 2 weeks or once every couple weeks, I'm checking coin market cap, but it's something that's a long-term hold for me. But that is that, guys. So that's my outlook. I don't want to keep running this too long to make the recording too long, so I'll go ahead and end it here. There's no questions in the chat room. If you guys do have any questions, feel free to reach out to me. I just want to say I am just excited to be back into getting into the groove of things, guys. If you are a free member, you can be looking forward to my weekly outlooks each week. Now I don't think I'm actually going to be in service. I'm going to be on a boat on the 13th next Sunday. So I may do a pre-recorded weekly outlook for next week, depending on how things look. But if for some reason there isn't a weekly outlook next week on Sunday, which I'm pretty sure there will be, there's going to be one on the 20th and the week after, the 27th, and every week after that. There's just an obligation that I have next week that has been planned for about a year and a half now. So that is that, guys. If you have any questions, feel free to reach out to me. If you got any value out of this, if you're watching this recording, please leave a thumbs up, a like, and comment. And that's that, guys. But have a great rest of your week, and I will see you guys if you're in the premium group tomorrow on our daily live webinar, and if you're in the free group on next week's weekly outlook. So take care, guys. Have a good week, and see you guys later.